In this video, I want to talk about how to trade supply and demand zones while the market is trending up or down. So if you look at my charts right now, we obviously, the day I'm recording this, had a very large rally where we kept putting in higher highs, kept putting in higher lows, and every resistance level and every supply level did not work out very well. Now, if you know supply and demand, it tends to be a reversal trading strategy. But in this video, I want to show you how you can play it for a continuation type of strategy. And I want to tell you how to avoid taking losses by shorting supply or longing demand in a trending market. Before we get into it, I recommend everybody watching this to follow me on my Instagram at Ameritrade. This is my only account. I'll never message you first. I only respond to messages, and I also will never follow you. The link for it will be in the description below. It's just a good resource. I post daily trading recaps, some good charts, setups, and just trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. You're missing out if you're not following it. But the first thing I want to explain is how traders are accustomed to supply and demand zones. So what usually you want to do is when the market is moving higher, we are trending up, we're moving higher, and we have a supply zone marked up, let's just say in this area right here, you wait for the market to come into your supply zone and you wait for valid confirmation inside of this supply zone saying, okay, we're inside of a supply zone, and the valid confirmation will give us the indication that sellers are present at our supply zone. When we have both of those components, then we could take the market short, anticipating a move lower. Now, there's going to be some days where the market is uptrending. We're putting in higher highs, we're putting in higher lows, and the market just keeps moving up. It looks like we start moving down off of a supply zone, only for the dip to get bought up, and then we start moving higher, breaking above the supply zone. This is a trending market where supply or demand zones for reversals are not going to work out very well. However, there are signs with the market that we can look to take the market long at, let's just say, a supply zone or a resistance level, indicating that sellers are not there, in anticipation that the market wants to continue to trend higher and rally past our zone, and we can capitalize on a long position there instead of a normal short position at a supply zone where many would look to take the market short. You always want to make sure you have valid confirmation before you enter any single trade you're looking to put on. So now I want to get into the pre-market plan so we can understand the setup from today, April 27th on Thursday, and it's all going to come together. So the pre-market plan for today was my key level was 4107 to 4110 on the S&P 500 futures. You could also trade SPY or SPX options off of these scenarios. I post these every single day in the Discord, levels and setups and scenarios that I'm watching. Scenario number one was a bullish setup. Now, 4107 and 4010 was a resistance level from yesterday where we actually took the market short. We spotted sellers on the tape the day prior, which was Wednesday the 26th, and at 4107, we were watching for a rejection to play short once the market could sell off, targeting the levels below. Now, the following day, after that level formed where this yellow line is, the overnight session happens, we get a rally up into our 4107 level. That's when I'm in the pre-market plan saying this is still my key level. If we can get above this, or once we're above this resistance level, it's not really supply because this level was formulated or spotting sellers on the tape. So if we can act support once we're above it or new demand forms at an area that there once was sellers, then I would focus on playing the market long, targeting the next supply zone above that, which was 4117. Now the market opens up and we get a rally into this yellow line, which was 4107, and there was a lot of trades getting facilitated at the offer, which is aggressive market buyers. So in the first, call it half hour, there was very aggressive market buying coming into the market. I updated the Discord in the intraday commentary tab. This is where I update my thoughts throughout the day, where I said we're at this 4107 level. Indicators not indicating strength or continuation here just yet. To validate this short setup, I want this level to reject and break below 4100, and then I'm interested in playing short, targeting 4090. The key thing with this scenario was I want to see a break below 4100 after rejecting this 4107 level. Now, the reason for this was the context was fitting that there was very aggressive market buyers into the market. Also, if we were to look at the tape, when we came into 4107, which is where I'm hovering my cursor over right now, every time we came into it, look at all the aggressive selling that came into the market right over here. Even though there was aggressive selling, the market was having a hard time selling off. So that's why in the Discord, with the fitting context, I was explaining that I'm not interested in playing short at the level. I would much rather see it reject and then play short once the 4100 whole number, where we opened up at, breaks. This prevented me from shorting the 4107 level of resistance. This also brings me into my next point. Now, you could see this off of a chart. You could see this off of the tape. You could see this off Bookmap, whatever you're looking at. But when the market finds acceptance at a level, what this tells me is the market is accepting the price that we are currently at. So just looking back at this 4107 level from the day prior, this was an area that the market sold off very aggressively. We also spotted sellers. If we were to pull up the tape from that day, we spotted sellers at 4107, and it was an area that there are sellers present in the market. So the following day when we test 4107, you have to think about it from an auction standpoint. If this yellow line was once an area that sellers were very, very strong there, buyers were extremely trapped there, then when we come up into this level, you want to see this similar action indicating that sellers are there. Now, the problem with this was we saw aggressive buyers. We saw the market finding acceptance, meaning we saw the selling, but something was not selling the market off lower, and we got a bunch of consolidation. When we have consolidation, and you must think of this from an auction standpoint, when the market consolidates, it's building volume at that price. If you're building volume at that price, you have buyers and sellers trading at that price. Now, if you have buyers and sellers agreeing on price or trading at it, or there's a lot of volume, then there's a lot of what you call acceptance at that level. And the chance of a high being formed here and a low, if we're talking about a demand zone, being formed is slim. And this, in fact, is a bullish indication because this consolidation will also formulate a new demand zone, where if you were to look from the pre-market plan was if we get to this 4107 level and either new demand forms or it acts as support, then this is going to indicate continuation, and I would want to play longs targeting the next supply zone and not be so interested in shorting this level of resistance or even supply to the upside. Now, what I'm mentioning here is based off of a resistance level where we spotted a seller off the tape. You're not really going to see it from a candlestick chart. However, the same also will apply to a supply zone. Let's just say we have a supply zone here. Exactly what I just explained is relevant to that as well. So now at 10:14, when the market breaks out like this, I did not take the market long off of this level. In fact, I was watching that downside scenario. However, I wanted a break below that 4100. And I want to make this a key point for this video. I really don't want to spend so much time on it or get into so much detail with it because there are videos in the course exactly about this. And I will be adding tons of new videos to the course as well. However, if you are shorting a downside reversal for a continuation, meaning we reject resistance or reject supply and the market sells off, let's say below 4100, you want to make sure your risk to reward makes sense, or else you should not enter that trade. If you're late or you're chasing it, do not enter that at all. But now at 10:14, after the market breaks out, I said what I'm watching for is any dip above 4107 to hold, to play long, targeting 4117, 4121, which was a supply zone from earlier in the week sell-off. Then at 10:49, I said a valid high a day is still not in. I'm still expecting another push higher into that supply zone first. However, I said we must pull back first. And a quick little gem I'm going to drop here is I'm going to pull up the tape, and what we're going to see here is the high, which was at 4115. If we were to zoom in at the high that was done here at 4115, there was massive absorption and there was a massive passive seller up at this level with a high amount of volume. This does not indicate a high probability of a high a day being in. You want to see less liquidity and you want to see a lot of trapped participants. This high volume and this action that we're seeing right here at 4115 is not reminiscent of a high a day, which is why that factored in with a high day is not in. I'm still expecting a push higher, and I'm still watching any dip above 4107 to hold, to play long, targeting the 4117, 4121 level above. We get that pullback right into 4107, a little bit below it, then volume starts coming in, and we get that push up right into our 4117 target to 4121 target. And if you want me to replay this feature, this is exactly what it looks like. You can see the price here. These are all volume profiles. We're going to get a pullback down after rejecting it for the second time. We get a pullback down right here into 4107 and immediately gets bought up. Look at that volume that came in. The high of day was broken right into our 4112 target. Now, similar and identical to what I just explained earlier about if we're have a resistance level or if we have a supply zone, because this was a supply zone right here at 4117 to 4121, which formulated on the drop from the 25th, which was Tuesday, this little consolidation from that drop, and the supply zone above that was formulated from the high of day on Tuesday, the 25th of April. Now, same thing that I mentioned earlier. If we come up into a supply zone or we come into a resistance level and it acts as support, if we consolidate there, we fail to sell off lower, we build new demand, that is a bullish indication, and you should avoid taking the market short. Now, hypothetically speaking, let's just say you even did take the market short, and let's just say it was at 4118. Well, if you're shorting a reversal like this, and let's say you got valid confirmation and it was a valid trade, well, your risk is only going to really be 3 or 4 points. So your risk is going to be small. You just have to accept the loss. And when you do win, for example, a trade like this, your wins are going to be 15, 20 points, where that 3-point loss was irrelevant to your one winner. But this right here, exactly what I said about consolidating, finding acceptance, acting as demand, new support forming, that indicated acceptance at this level for possible continuation. And guess what happened here? We kept moving higher, higher highs, higher lows. We found acceptance here again for a nice little end of day continuation into my 4162, 4168 level, which if you've been watching my videos and if you've been following me on my Instagram, this has been a very, very important level that I have been mentioning consistently. And also to help with the trend, keep an eye on VIX. You know, VIX was breaking below our support level, and that's just going to support and fuel a further rally to the upside, especially when we broke below a previous little lower balance range that I warned everybody that a scenario number one, if it occurs, we want to see VIX break below this little pink line. If you look back at the chart, it did very, very well. But keep an eye on other factors. Sometimes you don't have to fight the trend, and sometimes you got to go with it, because a day like today, it's normal for supply zones or resistance to get destroyed. If the market moved exactly how we wanted it to move, or it moved from, let's just say, resistance to support or supply to demand, then there's really not going to ever be a correct market. And just to show you the accuracy of this, again, here's the pre-market plan on the NASDAQ. If you trade QQQ options, same goes with this. We had a support level at 12980 to 13015. If this level can be supported at the open, then I want to play long, targeting 1309 for supply. Here's the picture. It was an old previous little balance range low, bounced off. It's not so much supply, it's not so much demand, it's just a previous balance range low. Yesterday it acted as resistance, sold off from it. Today we opened up above it. It now acted as support perfectly at 13015, targeting 13094 supply. And exactly what I have been explaining in this video happened here. There's no reason to fight the trend. If you see the market like this, there's no reason to play it short on the first downside move. I call it a first seller. No reason to do it. Wait for sellers to come into the market, and then you could play a retest, and that will help you not fight against the trend, especially when the context or conditions are fitting off of it. The context is key. Go with the flows of the market, never against it. I hope this video can help you. If it does, drop a like so I know if it does. Comment if you have any questions, and definitely check out the links in the description below. I will be making changes to the Discord, and I also will be adding videos to the course, and the prices will be increasing when I do add those videos in the near future. But I'm ending it. Peace out.